Broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. Just to let you know, this webinar is being recorded, but welcome to Lease Administration 842 Accounting Walkthrough. We're going to go ahead and do some quick introductions, go through the agenda, and then we'll get right into the webinar. So, Stephen, I'd like to start with the introduction.
Yes, thank you, Larry. All right, everybody, my name's Stephen Brenner. I'm a CPA. I have about 20 years experience with PeopleSoft implementations, 25 years total finance and accounting experience, and then 7 years specializing in lease administration, or what was formerly called real estate management. Go ahead, Larry.
All right, I'm Larry Zagata. I'm a managing partner in our VP of Delivery. I'm with MIPRO responsible for our projects, our methodology, our consulting, including our lease administration practice. I've been working in PeopleSoft for almost 20 years now myself. Stephen?
All right, good. Thank you, Larry.
Next slide, and we'll talk about the agenda. So for the agenda, we've gone through the introductions quickly. We're going to talk about the presentation goals for today. We want to make sure that you leave here achieving certain things. We're going to talk through the lease accounting discussion, and we'll just quickly talk about how MIPRO might help you with the new accounting rules and some Q&A. And just to let everybody know, everybody is on mute. If you do have a question, you can go ahead and hit the little raise your hand icon, and you can write a question, and we'll get it, and we'll be able to either unmute you or read the question and get you an answer. So that is how we'll work the questions and answers. So with that, I'm going to go ahead and turn it back over to Stephen to start the webinar.
All right, thank you, Larry. All right, so the first thing I want to cover is the presentation goals. So what I want to do is I want to do a walkthrough of the 842 accounting entries that will be created with my sample data utilizing PeopleSoft Lease Administration. So after we go through the walkthrough on the accounting entries, I'll also do a little bit of a walkthrough on the product. The emphasis of my walkthrough is just to point out a few of the features of the system that relate to the 842 accounting. It's not necessarily going to be an end-to-end walkthrough. Again, the emphasis is on the accounting entries. So I just want to point out certain features that relate strictly to or indirectly to the accounting entries. All right, let's go ahead. So next, let's just talk a little bit about getting your data ready for the new accounting rules. So moving from the 840 to 842 lease accounting rules, I have this little bit of a checklist here. One of the things is, you want to be able to create reconciling target balances. So know the 842 valuation of your leases before conversion. So for many entities that will be converting operating leases, you didn't necessarily have to know the present values or the ROU asset values of your leases. So, get those target balances in line so you'll have something to reconcile against. 2, identify the cutover dates for your converted data. So as you're moving along and you're getting ready to put your leases or migrate your leases to an 842 system, know your cutover dates and your converted data, because you have to know the values as of a certain date. So make sure that you get those planned out. Next, I talk about planning your testing cycles, especially with using PeopleSoft Lease Administration or any lease product. Your payments are monthly, and so your testing cycles will be monthly. If you want to go through a couple of testing cycles, then you should allow for 2 months of testing. So That's a good thing to understand. It's with many other areas within software, whether it's a purchase order or vouchers, your transactions are just when you want to create them. But in this case, you've got due dates, and it monthly tends to govern the testing cycles. Now, a note here about lease administration is that it integrates with asset management. So many of your accounting entries will be created by asset management. So the PeopleSoft Lease Administration product is integrating with asset management. It'll rely on asset management to create the liability entries, the asset entries, the expense entries, the amortization entries. That'll all be coming from asset management. And to that regard, I talk about, adjust your reporting requirements accordingly, because you'll have a different set of assets included, or a newer set of assets. So you may have some reports that don't need to be adjusted at all, but some of them may need to be adjusted. And one last thing on this page, in terms of your accounting entries, there will also be an accounting entry that gets cleared from accounts payable. But I will illustrate that later as we get a deeper dive into the data. All right, what I want to talk about next is let's go right into our lease examples. So this presentation, I've tried to focus it solely on the accounting, all right, and just enough of the product to show you some relative points. So I have a sample lease that I have created, or I'm going to use as part of this discussion. It's essentially an 11-year lease, start date January 1st, 2018, end date December 31st, 2028. There'll be monthly payments of $10,000. I'm also going to have payment escalations. So starting with 2019, our payments will escalate $1,000 per year. Good thing about including that as part of our demonstration, we'll get to see how PeopleSoft handles the straight line accounting as well. I'm using an implied interest rate of 5%, or our borrowing rate percent, 5%. I mentioned operating expenses be $2,000 to $3,000 per month, but it's not necessarily pertinent to our accounting examples. But the lease administration allows you to have rent and operating expenses on your leases. Per my examples, I'm going to include an operating lease and a finance lease, and I'm going to illustrate these under both sets of rules. So both under the 840 and the 842 accounting rules. All right, moving along, I have an amortization schedule that I've put together here. And this is for a operating lease. All right, we've got our start date of January 1st, 2018. I've just got the first, year or so on here. Given that we had our $10,000 monthly payment, and then if you look here down to January 2019, you'll see that it's escalating to $11,000. So each year, it's going to go up $1,000. 2020, it's going to be $12,000. In 2021, it'll be $13,000, and so on every year. If, as part of that, we sort of have, well, what's going to be our straight line cost? That's just a term I'm throwing out there. So on average, if we take $10,000 a month for the first year, and 11 the next year, and 12 the next year, it averages out to $15,000 a month. So that's an important number that we need to keep track of. So due to the rent escalations, our average monthly expense, maybe not necessarily lease cost, but our average monthly expense is $15,000. I've got, like here, I've got the rental payment, I've got the interest expense. So our liability is always going to decrease by the net of the payment and the interest expense. So that's what we have here. Our ROU asset balance is going to decrease by the net of our straight line amount and the interest expense. All right. So that's just sort of a little bit of a walkthrough on the operating lease amortization table. What I'm going to show next is let's look at this lease in terms of ASC 840, the current accounting rules. All right. When we activate the lease on January 1st, we don't have any entries required. We only have entries required when we make the payments. So we don't have to record any asset balances. We don't have to record any liability balances. At the end of the month, for January, we're going to have basically these journal entries. We're going to record a rent expense, and this rent expense is going to go against a clearing account which you designate. Now, I did all my work in PeopleSoft demo environment, so that's where I got these account numbers from, and I was working with the setup that they already had in place. So they were using the lease liability account as their clearing account. You'll see that our rent expense, this is under the 840 rules, and this is these journal entries. These are the lease administration journal entries coming from PeopleSoft. It basically would take my rent expense and break it up into two amounts. The first amount is for what I actually pay. The second amount is an adjustment so you can hit your straight line amount. And if I go back a slide, you'll remember our straight line, or our average monthly expense, is $15,000. So basically you take the 10 plus the 5, that's the $15,000. And then lastly, lease administration, it creates all the vouchers. So when it sends the payment over to accounts payable, it's going to use the designated clearing account 215,000 to record the $10,000 payment. So these two net to zero, and then basically you've got your $15,000 in expense, and then you've got your straight line amount, which is being tracked in a deferral accrual account, again, as designated in demo. All right. These accounting entries will repeat every month. And again, the straight line will adjust each year. All right. Ultimately, that this deferred account for any lease will net to zero. But next year, when our payments increase to 11,000, this will decrease to 14. The two will always net together for 15. All right, so that's this lease right here, or this amortization table under today's rules for operating expenses. Now let's look at, all right, so again, using PeopleSoft demo, and this was done with image 27. Basically what I did is and just using the information provided to me from PeopleSoft, I converted the lease administration demo environment that we have from 840 to the 842 rules. And again, I'm just using using this differentiator between 840 and 842. But what we can see now that under the new 842 rules, when we activate this lease on January 1st, the system will generate a journal entry for us. This journal entry will come from asset management, and it's going to put the present value of the lease onto the books. And it's also going to put the present value for the lease liability as well. So again, that's one difference. And again, it's being delivered by asset management. Now, at the end of the month, we're going to have the same thing. And these are also entries that are being created by asset management. we're going to have the rent expense recorded, and it's going to go against the lease liability account. We're also going to have the straight line expense amount difference recorded, and you'll see that that's being netted against the machinery and equipment account. All right. Next, the system will also create a journal entry for the net effect of the payment. So the $38.90, and just let me flip up a couple of pages. Where did I get the $38.90? That's the difference between these two columns, and that's was a debit which draw down this balance. And the asset balance, it's going to decrease by the net of the 15,000 and the 6,000. So roughly about, I don't know, 88.90, something like that. So going back to here, again, we've got our rent expense being recorded, we've got our straight line amount being recorded, and we've got, again, another entry is part of, this is netting out the interest expense. And again, these are the exact entries that you would expect to see in lease administration. And then finally, with the actual payment going to accounts payable, it'll hit the clearing account, and then it'll be for the $10,000 each month. The next year they'll go up to $11,000 and so on. One thing to note with an 842 operating lease, as we draw down the machinery and equipment balance, we don't use a depreciation account, we don't use an amortization account. We actually take it, the adjustment going downwards, we take it directly as a credit to that machinery and equipment account. All right, so that was the walkthrough on the operating lease version. So I've now shown the, just back up a page from PeopleSoft Lease Administration. Here's the 840 accounting entries we would see. And then what we were just looking at, here's the 842 accounting entries. And let's move on. And this is now if the lease was categorized as a finance lease. So, and I'm just changing the categorization. I'm not going to get into the criteria, but if I took the same exact lease, what would be the difference? How would this look? So we have our present value amounts here. We've got our interest expense. So the liability account is going to behave the same. It's going to get drawn down by exactly the same way if it was on an operating lease. But on the asset side, that's going to get handled a little different. So the asset side is going to get drawn down by the present value of the straight line amount. So it's not going to be a net between the straight line amount and the interest expense. The interest expense is already kind of applied and built in, but it gets drawn down a little differently. All right, let's move on to the next page. All right, now, a finance lease under ASC 842, similar to an 840 capital lease. So I'm only going to walk through the journal entries for an ASC 842 finance lease. I'm not going to do another page for the 840 capital lease because it'll be almost the same discussion. So just keep that in mind, that the two are similar. And just let me take a double check here. All right. So when we activate our lease, again, it's going to book the asset and the liability balances broken down, each one with the present value of the lease payments. At the end of the month, we're going to get our journal entries from asset management. Now, the rent expense is going to be handled a little differently. So we're going to get two components to the rent expense. The first component is the present value of the straight line amount. And with the finance lease, we don't adjust because a finance lease is in essence, you own the asset. So we're not going to adjust the asset value down. We're actually going to I'm using the accounts that were set up in demo, but we're going to use some kind of depreciation or amortization account. It'll be in a separate account. So those are the credit balances that are being drawn down. Our rent expense is the 11,109. We're also going to independently have an interest expense. So two separate components or two separate amounts are hitting the income statement. We also are going to do these entries to the lease liability account. This will net out to the actual principal reduction. And then finally, we have at the end of the end of the month, we have or not the end of the month, but we have our payment going to accounts payable that hits our clearing account, and it balances everything out. All right. So at this point, and again, these are the exact journal entries. These came right out of demo. All right. Moving along. What I want to do next is I want to do a little bit of a product walkthrough. So, and maybe I kind of ended this part kind of quickly. So really what I wanted to just show was, here's the journal entries that you should expect to see.
Hey, Stephen?
Right? Yes.
Sorry, we had a question that came in when you were presenting the last slide. It says, why does that entry show a debit and credit to 215,000?
So it's basically, it's using a clearing account. It's, maybe I've been working with asset management so long, I've seen it a lot. So whenever anything goes in or out of asset management, there's always a clearing account. So it has to balance out the entries. And in essence, the last part of it is when the payment goes to accounts payable, and you'll see that these two amounts net to zero. So your debits have to equal your credits, and because we're crossing modules, it needs a clearing account. And you might designate, I'm using demo, and this is what they set up for the clearing account. You might actually have an account and call it a clearing account. But again, I was just using what was set up in demo. All right, any other questions?
No, there's at this time.
Okay, all right, thanks, Larry. All right, so what I want to talk about next is I just want to do a little bit of a product walkthrough. And just, I'm not going to do an end-to-end discussion. I just want to point out a few of the changes that have been added to lease administration that are relative to the 842 discussion. All right, and again, everything I'm working on here was from demo. So there was a particular lease that was set up, and you'll notice down here at the bottom, we've got two asset IDs, asset 206 and 207. When you create a lease, that transaction that you're adding to PeopleSoft, but it's the assets that are being put on the books. Not the lease may be put in the system, but all your journal entries are being derived are relative to the asset. And one of the capabilities of the product is that you can have an asset and where maybe you can have a lease where one asset has been classified as an operating, given an operating designation, and another one is getting a finance designation. So that it is possible that you could have leases like that, and so that the journal entries for the 206 asset will follow the operating ASC 842 rules, whereas that finance that finance asset will face the 842 rules. or excuse me, the Finance 842 rules. Now, looking at this grid, PeopleSoft provides a view of the different criteria or the rules that whether you would classify it as operating or finance, and it gives you the decision right there. And if we look at this one here for the reception area furniture, this triggered the finance rules for two reasons. One, for the lease term rule, and then the other one was the transfer of ownership rule, whereas the rental of the building was strictly an operating. So again, it's information right on the page. There's also an action menu provided for each particular asset. These rules here are kind of cut and dry. Either you're on the operating side or the finance side, but if you have a subjective reason why you might want to classify an asset a different way, it does provide an override feature. And actually you'll see right here, there's the whether or not you've chosen the override column. And if you do an override, it dates and time stamps it, user ID stamps it, and it you put a reason in for that as well. Because I know that the classification that's a big policy, sort of how that's set. But if you do have to override it, it does timestamp it and everything. All right, moving along. Again, just talking about integration with lease administration and asset management. As you're adding properties to your leases, you're given this page here that gives you a view directly right into your asset table. So there's additional setup or additional pages that need to be created. No, it's all integrated. It's all built in. You'll see we've got asset profile, asset categories. So once those are set up, the location code, your estimated life that goes towards the lease term rule. There's the fair value of the lease needs to be entered. That's also part of one of the rules, the fair value versus the present value. Couple other rules under 842, transfer of ownership. Is it a specialized asset? Again, part of the 842 criteria. So again, this is information that you enter into the lease when you're creating the lease, and this will end up directly right into the asset management tables. Okay. Next, this was from the bottom of the lease page that we were looking at earlier, where we had the two different assets. This was the operating asset. This one was the finance asset. In terms of controlling your distribution or your chart fields or your GL codes, however you refer to it, basically you could set them up asset by asset. And then once you have those in here, or those distributions set up, it then defaults to your financial terms. So that works well. And then also part of, and depending on how you process your leases, maybe you do some kind of offline testing of what you want your values to be, but basically, as you're setting up your payment stream, PeopleSoft is displaying what your present value payments are, your REU asset costs, etc., so that you can use these numbers visually. Are you hitting your target numbers as part of your process? Okay. And I'm kind of jumping around the product a little bit. From Lease Administration, they actually give you a drill down to get to the journal entries that are being created for your lease. So this window here, I mean, obviously you could query them or get them in a report, but they give you a drill down right on the page. So I took a screenshot of that. For those of you that are keeping score, you might have noticed, or you might notice that this amount doesn't exactly match what was the present value for my amortization tables, but that was because we had a system refresh and I had to redo my leases, and I didn't set the due date exactly correct. But just so you know, I'm aware of that. But so if you try to reconcile back, just keep that in mind. But everything was pretty close. I think it was just off a couple of days a month, and it threw off the present value by a few $1,000s. But no, everything works fine. All right, moving on to the financial terms page. The system is set up that you can store a default % borrowing rate. So this is used for calculating your present value of your lease payments. All right, you can override it on the lease, but the system does have a default setup. As you're setting up your financial terms, so basically, as I was saying before, I was going to do $10,000 a month. And this particular one I did set up to escalate. So that's why we get our escalation icon displaying. And this was the operating expense of $2,000 that I had mentioned earlier. All right. So let me take a step back. So what I'm going to do next is I've got a screenshot where I'm opening up this base rent term. All right. And at the bottom of that term, remember I said I was going to escalate rent $1,000 a year. You can do it by amount or percent. I just kept things simple and just did $1,000 a year because I wanted the numbers to look clean. And then you can tell it how often do I escalate, and then when's the first escalation date. So basically, I have, every January, every year, rent goes up, and then these are the amounts: 10,000, 11,000, 12,000, 13,000, and so on. And per our amortization table earlier, this averages to $15,000 a year. All right, I moved on to the options and critical dates page. So pertinent to the 842 rules, if there is a purchase option, you can add that to the lease, and PeopleSoft Lease Administration will track that. They give you a couple of dates. This first column here is when do I want to start getting notified that I have my date, that I have a purchase option, and then the second date is what is the effective date of that option. Maybe I should have made this the notification date a little earlier, but anyhow, got the payment date for my option. Here's the option amount. Now, one thing that I didn't check on because I didn't want it in my amortization tables. If you have a purchase option and you know it's going to be executed and the term is reasonably certain, you turn this checkbox on, and then this amount will then get factored into your amortization tables, your present values, your ROU asset costs, etc. So again, you can keep the purchase option on your lease, but then when it's reasonably certain, that's when you can have it factor into your accounting entries. All right, next here I have a business unit from the business unit definition page where they talk about some of your criteria. Is it a bargain purchase option? What's the percentage? And again, here these other ones, these are defaults. My lease term percentage, my PVLP to asset fair value percentage. So you get those stored in there, and if for whatever reason you need a particular BU that needs to use a different set of rules, you can put in different percents. Also, now I have been using the term 842, all right, and I didn't mean to exclude IFRS, but if a particular business unit is going to use IFRS rules, then you would turn this checkbox on. The distinction between IFRS and the ASC rules is under ASC, leases can be considered operating or finance, whereas under the IFRS rules, the leases are always a finance lease. So just keep that in mind. That's a business unit setting. All right, moving along. Again, just a different checklist here. We talk about, is your organization easily able to identify all your leases? That's not always the case. Sometimes it might be very decentralized. So that's one thing you kind of have to be able to pull that data together. You know, I talk about aligning the upcoming accounting standards to all your leased assets. So under the 840 rules, you were only concerned about the payments. So now you're going to have to be concerned about what is the fair market value of these assets that I'm leasing. You're going to have to gather additional information, or at least have the additional information available to the people that need to use it. Also, there might be, under the new accounting rules, you might have to change your business process or make an adjustment or add a few extra steps to it. Once you're able to get all that in place, I think you can get to a point where you can actually start testing leases put together here. And then lastly on here is understand how your organization is going to apply with the new accounting rules. So what I've seen is, I might be involved on an implementation side, but there's also an accounting board or a set of accountants, et cetera, that they're the ones that are setting our targets and setting what the accounting value should be for these assets. So again, understand how you're going to comply. Another twist on this is depending on who your lessor is, they might offer you base rent and it includes all the operating expenses. And then you might have another lessor that charges rent separately from insurance, from tax, from CAM, from operating expenses. So under the old set of rules, the 840 rules, I won't say old, under the current rules, that's fine. But when you go to the 842 rules, there might be some standardization that you might have to go through how you're going to account for your leases on the books so that your numbers are consistent. Okay. Right. The last section that I want to walk through is for the particular lease, and I'm talking about a finance lease here. What if I need to do an amendment from the lease? So what I just want to do is we'll discuss the amendment, and then again I want to illustrate what accounting entry should I expect from the amendment. All right, so as part of this process here, we're going to do an amendment, and we're going to increase rent by $2,000 a month starting May 1st. All right, so I'm going to kind of go back and forth between sort of an end-to-end discussion on this and then focusing on the accounting entries. So to start the process off, we're in our lease, and let's go ahead and we'll go to our Manage Amendments page, and it'll bring us to sort of this page where we're going to launch our amendment, some user-derived fields that you have here, amendment types, amendment reasons. So again, I'm using demo, all the demo values. So basically I'm adjusting my base rent amount. You'll notice here relative to the 842 rules, there's a remeasurement option. So in this case, yes, I'm changing rent. I need to remeasure my my asset and liability balances. So I've got that turned on for yes. Now one button, and I left it as yes, is you might be changing some amounts on your lease, and it might actually change the classification from operating to finance or vice versa. So you can let the system reassess that classification. Now, in my particular case here, I wasn't going to affect the classification, but I just left that setting set to yes. All right. Once we get that little setup page for the amendment in place, it launches the lease amendment page, which looks very, very close to the regular lease page. I'll just point out at the top, they kind of have here in bold letters, kind of in a prominent place, that you are any pending amendment, and it actually has, excuse me, an amendment count. All right. And again, just as a reminder, we're using our Finance 842 lease, and the asset here is classified as a finance asset. All right. Now, some of these screenshots I took after I already made the change. Now, if you remember that our present value of our asset, or the ROU, was roughly 1,405,000, something like that. I don't remember the exact number, but I've added, from increasing rent $2,000 a month, the ROU balance increases until 1.76 million. All right. Oh, another thing to point out is that when you're doing an amendment, you have two dates. All right. So one, the system allows you, obviously you can do something backdated, but the system allows you to put changes in the system. And in essence, you don't have to do it exactly when that change takes place. If you know that there's going to be a change taking place in September, you can go ahead and put the transaction date as September. And you could put the accounting date as September. That's when it'll take place. And then that's what the journal entries will get stamped, or excuse me, the entries will get stamped in asset management. Now, in this particular,
Steven?
Yes.
Steven, we have a question.
Sure, go ahead.
I'm going to go ahead and read it. Let's see. For an operating lease, if you change suites but are still located physically in the same building with the same landlord but reducing square footage, this is done as an amendment to the lease. Do you set up a new lease in the system with the new standards, or is it appropriate to amend the current lease?
So what I kind of heard was, now, if I was in an office and I was using the same office and I was reducing my space, I'm still using the same asset. But what I kind of heard was, I'm in the same building, but I'm moving to a smaller suite. And I would say that would start getting down to your policy, because you might look at it, well, I'm changing assets, but it could be done either way. You might have to relabel what the asset is. If I wanted to be very strict on how I handle my policies, I could end the first lease and create a second lease. But with some flexibility, you could keep the same lease and just, they say, reduce the payments. So it can go either way.
And they did confirm they are, yes, you are correct, they are moving suites.
Yeah, so in the strictest sense, that might be considered, it's not the same suite. So I would end the first lease and then I can start a second lease. And they do provide a field that you could link the two leases together. So at least from a reporting requirement, you'd be able to identify that that the two leases are related. All right, thanks, Larry. All right, so moving on, I'm going to the I opened up the base rent financial term, and you'll know, and I took a screenshot here, and you'll notice way at the top, it's now the new amount of $12,000. So basically, I just typed over the 10,000, I put 12,000 in. Whatever took place in the past, so January, February, March, and April, those were fully processed. Those transactions, they're stamped with $10,000. It's only from May going forward that we get the new $12,000 amount. after I put that $12,000 in this particular case, I kept it simple. I'm still going to do the same escalation on the same date. I just regenerate my escalation schedule. So I now have an escalation of 13,000, 14,000, et cetera, 15,000 for each succeeding year. Now, so here's our finance lease amortization table. And these numbers here, they tie out. So basically what I did is I took, well, maybe this number here, no, that number might be right. But basically these two numbers right here, these were the ending balances from April in the amortization table that I had earlier in the presentation. Then from here, I now have my lease expansion adjustment. So basically, I have this value plus this value. I'm not sure if I updated this column here correctly for the first couple of rows, so excuse me for that. But basically, this adjustment amount, so by increasing my rent payments to $12,000 a month, and then it becomes $13,000 the following year, what do I get? Well, first of all, my old expense, I believe, was $11,109. Now, with the higher, with the increase in rent, it's now $13,398. All right. So I'm going to get a journal entry for putting this adjustment amount on the books. My rental payment's going to change, obviously. I'm going to have more interest expense because obviously I'm increasing the value of what I'm leasing, so I'll have higher interest expense. All right. Let's go on to the next page. So at the time that you activate the lease amendment, PeopleSoft Lease Administration is going to increase the value of your asset, and it's going to increase your liability. All right. So this is the present value of those changes. All right. And then just likely moving forward with what the differences we saw in the amortization table, it's now going to record your rent expense at the higher amount. It's going to do your accumulated depreciation for the leased equipment at the higher amount. And again, this is all, it's all from demo using their accounts. The interest expense is going to be at the higher amount. Again, this is all from the updated amortization table, and we're going to use the same clearing account. So everything here now reflects the adjustment. So, and again, these would be the exact journal entries that you would expect to see coming from PeopleSoft Lease Administration.
Stephen, there's another question when you're ready.
Oh, go right ahead, Larry.
And this one came at the tail end before you switched topics, so you were on a roll.
Go ahead.
The question is the borrowing rate percentage, if you use a system stored field and you change it to increase by 1%, will it recalculate existing leases from that date or only the new ones created after the date of the 1% increase? So the setup value, and this is just as delivered, the interest rate percentage, it's a default value and it goes on to the lease, but there is not a feature that lets you change the rate and then it retroactively starts. That's what I think I'm hearing. Can I retroactively update my leases by changing the interest rate? So you would have to go into each lease one at a time, amend it, put the new rate in, and then you'll get the activate. Then you'll get the change. But there isn't a. That's what I think I'm hearing is there one spot that I can go to, change the interest rate, and then it'll go and process it against all the active leases, but that's not there. Okay. Next question is, what transition date are you using for this data? Is the PVLP based on the transition date? So this was a brand new lease, and again, image 27 is delivered with the 840 rules on,
And so I converted my demo environment to the 842 rules. So in this case, the transition date isn't an impact. Where the transition date will be an impact is that when you take, let's say, an existing lease, and maybe you're moving it out of, it's an equipment lease, and maybe you're moving it out of asset management, and you would pick a transition date for that. That would be where the transition date is the impact. And perhaps here, you know, that I was starting an 842 lease January 1st, 2018. Well, obviously that the rules don't take effect until next year, but you know, I just want to be able to get the system configured and get the new journal entries going now.
Okay, a couple more. This next one is the rate is per lease, correct? Not for the entire portfolio.
So the interest rate that was, let me go back, see if I can find that page. So this interest rate here only impacts this lease, but you can store a default interest rate. So when you create a new lease, you're handed an interest rate that it'll give you. So there's a default rate that every time you create a lease, it'll want to use, but you can override it lease by lease. It's not a requirement that I use the default rate. In fact, I actually put 5% in there myself. I didn't accept the default rate.
Okay. Next question is image 24 has all the functionality we needed for 842, correct?
So that's a good question. So in image 42, you actually can start creating 842. Sorry, image 24, pardon me. In image 24, you can start creating 842 leases. It's just with image 27 where it comes with the tools to migrate equipment leases out of asset management into lease administration. That's the difference.
You ready for one more?
No, keep going.
All right. This question box is very small, so I read slowly. Currently, all of our leases are operating leases. With the new definition for lease, will we be required to reclassify a lease to finance lease? Will PeopleSoft allow us to change the classification of lease?
All right, so odds are if you, the classification rules under the old system, I don't want to keep saying old. So under 840, your leases were either operating or capital. And under 842, your leases are either operating or finance. So odds are, if you have a lease that's classified as operating under 840, it'll be classified also as operating under the 842 rules. The classification rules are not vastly different. They're similar, but they're not vastly different. So, but if by chance one of your leases did get reclassified and just due to some policy or some interpretation, you can override that. Always an option.
Okay. So, Stephen, we've got 6 minutes left, so I'm going to let you continue on before we get more questions.
All right. All right. Very good. So I was actually down to, I believe it was my very last slide. So let me pop back. So last slide I wanted to show, and just to show the integration and between lease administration and asset management. And you can see kind of in the background behind the window there, I'm running Depper Calc, and basically you'll see at the very bottom here for asset 219, there's an adjustment. So basically it uses the same adjustment accounting entry templates. Basically by increasing my rent by $2,000 a month, that's where I got that value. And it's all going through asset management. So I just thought I'd show the screenshot. You'll see looking down this column here, everything's labeled an addition, but in this particular case, I've got an adjustment, and that was for increasing my rent. All right. So now we are on to how MIPRO can help, and I will end off the microphone to you, Larry.
Okay, so there was another question asked about if you can get a copy of the presentation, and absolutely. So you can certainly feel free to send me an email. My email's right there at larry.zagat@miproconsulting.com, and we can get you a copy of the presentation and recording. You know, we certainly have a lot of lease information on our website. So Stephen's done a number of blogs that have this type of information, the level of detail, along with different aspects of PeopleSoft Lease Administration. So we encourage you to go visit that. If you need any information in terms of you know, the lease administration product, implementation, approaches, estimates, etc., you can certainly reach out to me as well. We can certainly help you with those types of things. So we've done a number of lease administration implementations, and certainly have folks like Stephen who are experts in that area. So so please reach out if you do need any additional detail regarding lease administration. Okay. And then with that, any final questions?
So Larry, prior to the, as part of the registration, we did receive a couple questions up front.
Okay, go ahead.
So one of the questions was, can the system handle a balloon payment? And the answer is yes. So however your payment stream is, basically you can set up your financial terms, and perhaps that balloon payment's a purchase option. Yeah, they could definitely do that. The other question that I had was, oh, can I talk about the changes to asset management? So more or less, you know, with Pump 24 and Pump 27, the changes are to lease administration. There's very little that you have to do as far as changes to asset management, because it uses all the existing setup that's there. It's basically the accounting entry templates, your profiles, your categories, that drives everything. All right, so yeah, those were the two I had up front.
Okay, there's one more question. I'm not, maybe you'll understand it. I'm not. Do you know who, CPA question mark, approved all the accounting to meet 842 with PeopleSoft Lease Administration?
So someone's asking me, which accounting firm did PeopleSoft work with that they got the sign off for their software?
Okay.
You know, I've read a lot of stuff out there. I don't know if it was PwC. You might want to ask them directly. But I know I've been at organizations where they have, you know, an Ernst & Young or another firm just like that, and you know, they're creating all our reconciling targets, and we're hitting our numbers. So using lease administration.
Okay. Yeah, I'm not sure which accounting firm either, but I know it was done. Maybe we can see if we can follow up.
It was one of the, I don't know if it's the Big Four or the Big Five, but I remember either being at a user conference and Lloyd Ches was asked that question, but yeah, but I don't remember the answer.
Okay. Next question is, if we don't have lease admin module, can we use the lease admin piece of asset management for 842?
You know, that's a licensing question. I know that if you're using asset management for leasing equipment and you want to use lease administration for that they've got a different set of rules versus someone that maybe wants to use property. Again, I don't know the answer to. I know you can do it. I just don't know what you're allowed to do based on your licensing agreement.
Right. So from a product functionality standpoint, the answer would be yes. From a how you're licensed, you don't know.
Yeah, thanks, correct? Larry. Yeah.
Okay. Okay. Well, with that, it is 4 o'clock. Certainly, if there were any other questions, you can feel free to send them to my email address, and we'll get them answered to everybody. But appreciate everybody joining the webinar. Thank you.
All right,
Have a
thank you,
great day.
everybody.
Thanks, Stephen.
Thank you, Larry.